A 72-year-old retired widow named Marjorie sits at her kitchen table in Ohio. The morning light is coming through the window. In her hands is the property tax bill that just arrived, $4,700, due in 60 days. She stares at the number. Her late husband used to handle these things. Now it's just her Social Security check, and a small pension that barely covers the basics. $4,700 feels like a wall closing in. She runs the math again. If she pays it, she can't afford her heart medication this quarter. If she skips the medication, she risks the hospital. If she skips the tax, the county can foreclose on the house she has lived in for 38 years. Marjorie does what so many seniors do. She cries quietly, alone at her kitchen table, and she writes the check. And she goes without her medication for 2 months. But here is what nobody told Marjorie. There is one form sitting at her county assessor's office that she could have filed years ago. A free form. A form that would have cut her property tax bill by hundreds, possibly thousands of dollars every single year. A form that 98% of eligible senior homeowners in America have never filed. My friend, if you are 60, 65, 70, or older, and you own your home, please listen to every word of this video, because the form I am about to tell you about could put real money back in your pocket. Money you never have to pay back. Money the government already set aside for senior homeowners like you. Hello, my friend. I am Masha, a senior policy analyst here at Pension and Law Unlocked. For years, I have helped retirees uncover the hidden government programs designed specifically for senior homeowners. Programs that exist in nearly every state in the country. Programs that require only a single form. Programs that quietly transfer thousands of dollars back to the seniors who claim them. Today, I am going to walk you through that one form, the rules behind it, and the 3 exact steps you must take to claim it. Whether you live in Texas, Florida, California, Illinois, Massachusetts, Ohio, or any other state, this video applies to you. Please, stay with me until the very end. Because there is one hidden mistake, a quiet, expensive mistake that causes seniors to lose this benefit even after they qualify for it. I will reveal it near the end of this video. Don't skip ahead. You'll want to hear this carefully. Let me tell you about Walter. Walter is 74 years old. He lives in Florida. He worked as a delivery driver for 36 years. When he retired at 65, his Social Security check came to $1,900 a month, and his property tax bill on his modest 3-bedroom home was $3,800 a year. For 9 years, Walter paid that bill in full, every year, without question. He thought it was just the cost of being a homeowner. Last fall, Walter's neighbor Doris stopped by for coffee. Doris mentioned, almost in passing, that her property tax bill had been reduced by $1,200 a year because she had filed something called a Senior Homestead Exemption. Walter had never heard those words. That night, Walter called the Florida Department of Revenue. The next morning, he visited the county property appraiser's office. He filed one single form. His next property tax bill came in $2,600 cheaper. But here is the part that haunts Walter. He had been eligible for 9 years. 9 years of overpayment, more than $10,000 of his retirement savings, gone forever, to a bill he should never have paid in full. Florida, like most states, does not refund those missed years. That's why I'm telling you today. So this never happens to you. Let me walk you through this hidden benefit, piece by piece. Number 1. The Senior Homestead Exemption. According to AARP, the easiest way to cut your property taxes is to apply for the Senior Homestead Exemption, sometimes called the Senior Property Tax Exemption, the Over 65 Exemption, or the Senior Homestead Credit, depending on what state you live in. Here is how it works in plain English. Your home has what's called an assessed value, the dollar figure your county uses to calculate your property tax. The Senior Homestead Exemption reduces that assessed value, sometimes by tens of thousands of dollars. A smaller assessed value means a smaller tax bill. Listen carefully. This exemption exists in virtually every state in America. The form name is different in every state, but the program itself is nearly universal. Here are real verified examples. In Florida, seniors 65 and older with limited income can receive an additional exemption of up to $50,000 off their assessed value, on top of the standard homestead exemption. That's typically $300 to $1,200 in annual tax savings. In Texas, the over 65 exemption gives you an additional $10,000 off your school district taxes. And it does something even more powerful. It freezes your school taxes at the level you had the year you qualified. So if your home's value goes up, your school tax does not. Over 20 years, this can save tens of thousands of dollars. In California, the Homeowners Exemption, Form BOE 266, is a one-time filing that reduces your assessed value by $7,000. Once you file, you do not need to file again unless something changes. In Massachusetts, the Senior Circuit Breaker Credit is a refundable state income tax credit specifically for seniors 65 and older paying property tax. In Illinois, especially Cook County, the Senior Homestead Exemption combined with the Senior Freeze Exemption can save eligible homeowners between $1,000 and $3,500 every year. In Washington State, the Senior Property Tax Program both reduces your bill and freezes your home's taxable value at the year you first applied. In Montana, South Dakota, Connecticut, Oregon, and dozens of other states, similar programs exist with various names and various income limits. Now, here is the most painful trap. Most seniors believe this exemption is automatic. They believe that the moment they turn 65, their county knows it and adjusts their tax bill. That is almost never true. Nearly every state requires you to affirmatively file an application with your county assessor's office. The county does not chase you down. Your mortgage company will not file it for you. Your tax preparer will not file it for you. You must file it yourself. And here is the second trap. If you refinanced your mortgage, sold and bought another home, moved into a trust for estate planning, or had a spouse pass away, you may have lost your exemption automatically. You must reapply, but nobody tells you. Number 2. The Senior Property Tax Freeze. This is the second program most seniors have never heard of, and it is separate from the homestead exemption. The property tax freeze, sometimes called senior freeze, assessment freeze, or tax ceiling, locks the assessed value of your home at whatever it was the year you first applied. States with senior tax freeze programs include Texas, Illinois, New Jersey, Washington, Tennessee, Connecticut, Oklahoma, Oregon, and many others. Here is why this is so powerful. Property values across America have risen sharply over the last 15 years. In some neighborhoods, home values have doubled or tripled. Without a freeze, your property tax doubles or triples right along with it. But if you filed for a freeze at age 65, when your home was worth $200,000, your property tax stays calculated on that $200,000 forever, even if your home is now worth $400,000. Listen carefully to this trap. The freeze and the exemption are separate programs requiring separate applications in most states. Filing one does not enroll you in the other. You may need to file twice. And another trap. Many states require you to recertify your income every single year to keep the freeze. If you forget, even 1 year, the freeze can be lifted, and your taxes can jump back up to current value. The earlier you apply, the more powerful the freeze becomes. Every year you wait, you lose protection that compounds for the rest of your life. Number 3. The property tax deferral. This one is for seniors who are cash poor but house rich, the seniors I worry about the most. Several states, including Oregon, Texas, Massachusetts, Illinois, Wisconsin, Washington, and California, offer property tax deferral programs. A deferral does not erase your property tax. It postpones it. The state allows you to skip paying property tax for as long as you live in the home. When the home is eventually sold, or when ownership transfers after your passing, the deferred tax is paid back from the sale proceeds, usually with modest interest. The Consumer Financial Protection Bureau confirms this directly. You may be eligible to lower your tax payments if your state offers a tax relief program for older adults. Here is the trap. Many seniors fear deferral because they think it means they will lose their house. They will not. The state places a lien on the property, but you keep ownership. You keep the right to live there. You keep the right to vote, to renovate, to refinance. Nothing changes about your daily life. For a senior who is choosing between paying property tax and buying medication, deferral can be a lifeline. It is one of the most preventable causes of senior homelessness in America. Seniors fall behind on property tax. The county forecloses. They lose the house. All of it could have been avoided with one application. Number 4. Appeal your assessment. Here is something you can do regardless of age, but it matters most when you're on a fixed income. Every U.S. county reassesses property values on a regular cycle, usually every 1 to 3 years. When that happens, you receive an assessment notice in the mail. It is not a bill. It is a notice of value with a critical appeal deadline, often just 30 days. According to AARP, you can challenge that assessment yourself without a lawyer in most cases. You can challenge it based on errors, wrong square footage, wrong number of bedrooms. You can challenge it based on comparable sales, similar homes in your neighborhood that sold for less. You can challenge it based on condition, an old roof, a foundation problem, deferred maintenance. Most counties allow online filing, most charge no fee, and up to 6 comparable sales can be submitted as evidence. The trap is that seniors throw away the assessment notice thinking it's junk mail or a bill they don't understand. Or they hire predatory companies that take 30 to 50% of any savings, when the same appeal could have been filed for free. Number 5. The Hidden Property Tax Work-Off Program. This one almost nobody talks about. A growing number of counties, especially in Massachusetts, New York, Connecticut, New Jersey, and Colorado, offer something called a Property Tax Work-Off Program. Seniors age 60 and older can volunteer for municipal tasks, like clerical work, library help, helping in parks or schools, and the value of that work is credited against their property tax bill. The credits typically range from $500 to $2,000 per year. These programs are not advertised. You will not find them on a billboard. You have to call your county assessor's office or your local senior center and ask. If you would have volunteered anyway, this is essentially free money. But you must enroll, and slots are usually first come, first served. Now, my friend, let me give you the 3 exact steps you must take this week. Please write these down or pause this video and listen again. Step 1. Open your laptop or your phone and search the words Senior Homestead Exemption, followed by your county name. Every county in America has an assessor's office, and every assessor's office has a website that lists the exact senior exemption forms available where you live. Don't worry if the website looks complicated. Just find the senior or elderly section. You can also call the county assessor's office directly. The phone number is on your most recent property tax bill. Step 2. Visit AARP Foundation Property Tax-Aide. This is a free national service. The website is on aarp.org. AARP-trained volunteers will help you, free of charge, identify which exemptions, deferrals, and credits you qualify for in your state, and help you fill out the actual forms. They are not selling anything. They take no commission. They exist to help you. Step 3. Gather your documents now. You will need a government-issued photo ID showing your date of birth, proof of ownership, your deed, or your most recent tax bill, proof that the home is your primary residence, a utility bill or voter registration, and if the program is income tested, your most recent Social Security 1099, your pension statement, or your last tax return. Put these in one folder. Keep that folder ready. Most applications take less than 30 minutes once your documents are in hand. Now, here is the hidden mistake I promised you at the beginning. The mistake that causes seniors to lose this benefit even after they qualify. It is the predatory paid filer. After you turn 65, after you buy a home, after you refinance, after a spouse passes away, your name often appears on a public records list. Within weeks, you will start receiving very official-looking letters in the mail from companies that say, "We can file your senior property tax exemption for a small fee. Pay us $500 and we'll handle everything." Listen to me carefully. These applications are free, always. Every senior property tax exemption, freeze, deferral, and circuit breaker credit can be filed directly with your county at no cost. AARP Foundation Property Tax-Aide will help you for free. Your local area agency on aging will help you for free. The county assessor's office will help you for free. The Consumer Financial Protection Bureau has issued specific warnings about these scams. Do not pay anyone to file a free form on your behalf. If a letter arrives looking very official, demanding a fee, with urgent language and a deadline, that's the scam. Throw it away. The real county assessor never charges a fee. And one more thing. Some of these scams collect your personal information, social security number, bank account, date of birth, and use it for identity theft. Never hand over your personal information to a company you did not contact first. My friend, please listen carefully now. YouTube does not always show you my videos. The notifications you rely on don't always arrive. Property tax laws change every single year. New exemptions, new deadlines, new scams targeting senior homeowners, new programs you may qualify for. You cannot afford to miss them. That is why I want you to click the link in the description below and join the Global Senior Alerts official WhatsApp channel. It is completely free. The moment you join, you will receive your free copy of the Senior Benefits Protection Guide, a simple, plain English booklet that walks you through the rules that protect your Social Security, your pension, your bank accounts, your insurance, your property taxes, and your travel rights. You will also receive real-time alerts. The moment a state changes its property tax rules, the moment a new senior benefit opens, the moment a new scam targets retirees, you will know first. Do not wait 9 years like Walter did. Do not lose $10,000 in overpaid property taxes you were never required to pay. Do not let confusion or junk mail or scammers stand between you and the home you spent a lifetime building. Click the link now, join us, protect yourself, protect your spouse, protect everything you spent a lifetime building. This is Masha from Pension and Law Unlocked. Thank you for trusting me with your time today. Stay informed, stay protected, and I will see you in the next video.